Today I'll be presenting 5 points to ponder in 2024. So first, the agenda. I'm going to go through those 5 points, followed by some comments on my presenting company, Apper Silver, and then finally some thoughts on field notes, my video series, and newsletter. So 5 points to ponder in 2024. Number one, political risk is a ubiquitous threat to your portfolio. And I think the longer I've been in this sector, the more true this rings. Whether you're in South America, North America, Europe, each of these people can be a threat to your portfolio. And I think the next decade, it's probably going to prove more and more true. But you don't take my word for it. This is what Rick Rule had to say to me back in 2017. He said, "My own experience is that most investors equate political risk to their emotion rather than to reality. And you tend to react more strongly to political risk that you don't understand or haven't experienced. My own belief is that money that is stolen from me by white people in English, according to the rule of law, is just as gone as money that is extorted from me from a third world kleptocracy." So if you look around and you think to yourself, okay, let's use Canada and the States as an example. I think you can come up with numerous examples of companies that have had their share price impacted by some environmental permitting issue or environment in general or social issue. And it's no longer just a South American or an African thing. This is definitely something that's perpetrated into North America and Europe, the so-called tier one jurisdictions. I think deglobalization is one of those things that are happening that could make this even worse. The rush to secure the supply of critical minerals for this electrification of the world, I think is going to be a bigger issue moving forward. And we're already starting to see some new things that are happening in the market, or at least new to me. There's a company I've invested in called Solaris Resources, pretty big company. Their flagship project, Borwinsa, is located in Ecuador. Recently, they had a $130 million investment by Xinjiang, or a proposed investment. That deal is actually under review by the Canadian government, their IRB, to see if they're going to approve that deal or not, despite Borwinsa being located in Ecuador. But the fact that it's a critical mineral in copper is sort of what puts this at risk to being not approved. And to me, that really boggles my mind, because the implications of a deal like this not going through could be huge. If you see how that, if you have a critical mineral project outside of Canada, why be domiciled in Canada if that's going to be a problem? And so it'll be quite interesting. I don't think the Canadian government's going to not approve this. I think it is going to get approval and it's going to go through. But it's a glimpse into how projects and deals are being looked at by these tier one jurisdiction governments, and how it's sort of a hidden risk, I think, to a lot of retail investors. If you look back a couple years ago, the Chinese were blocked from buying Hope Bay from TMAC. And of course, that allowed Agnico Eagle to come in and buy that project. And now that was gold. And while I think gold should be a critical mineral, a critical metal for countries, it's not in Canada. And thus, they still denied that acquisition. Number two, don't put all your eggs in one basket. I get a lot of emails from newbie investors and readers, and they talk to me about their portfolios and they have questions. And the commonality that I see is that people are doing the work to find markets that are moving, and they want to put their money in there. I think the problem is that most guys want to go all in on one or two companies in whatever metal is moving the fastest, sort of that FOMO. And I think that can be a problem. In the short term, you can actually make some money doing it, and that's not a problem. But I think what happens is most, especially newbie investors, don't know how to sell. They get their profits, they think, oh, this is going to continue forever. I want to see this into a 10-bagger, and they end up being a bag holder. And the share prices and the metal prices go up, and they inevitably come down. And that's a big problem. And learning how to sell is definitely part of the mystery. But I think if you want to take a portfolio approach, that's a much better way to protect your downside and ultimately make money on a consistent basis in the sector. So to me, I think you want to hold 10 to 20 companies from varying levels of risk, exploration, development, production, but you want to relate that to how, what your knowledge level is, what your risk level is, and then a varying metal focus, so precious metals, base metals, energy. I think you also want to buy companies in terms of de-risking your portfolio. You want to buy companies that are selling for less than they're worth. So this is counter-opposed to the FOMO effect. Price is the best de-risker you're going to have in the market, and unfortunately that means that you're going to be buying when other people don't care or are telling you you're wrong. Precious metals is a great example of that, where most people are highly negative. There's probably a net cash flow out of the sector, but I think these are the very reasons why you want to take heed of it. And if as long as you have more than a 3 months time span for your investment, I think you can make a lot of money. I think the key is longevity. You want to be around long enough to hit those bull markets, and that's ultimately where you're going to make your money. And this is a quote from GM Loeb. He said, "There's not nearly enough good investments or speculations to go around. Hence, on an actuarial basis, when one ventures into any kind of investment, the odds are against one." And so I think that highlights the need to be picky. Number 3, don't get shaken out. Maintain your perspective. I think so often, people do some of the due diligence, and they pick a good company, they understand it, they outline, okay, this is why the share price is going to go up. And hopefully they bought a company that's selling for less than it's worth, so they probably bought in a market like today, precious metals. The problem is they do the work, they say this is how the share price is going to go up. Maybe it does go up, and then let's say the market is that much more volatile in a bear market, and you get instances like on the right. This is actually a snippet from a chart of a company that I own. And it shows you the share price runs up to 11 cents and then invariably falls right back down to 5 cents. And I think specifically in this case, the people got shook out because of things that weren't beholden to the company. This is market fear based. This is the essence of what a bear market is. And the reason why you need to maintain your perspective, realize why you bought that company, how they're adding value. And as long as the share price isn't falling necessarily because of what the company has done, it's probably a spot to hold or to buy more. And this is the same share price chart. And this actually goes back to the COVID crash. So you see the run up on the left, runs up to 11 cents, crashes with the COVID fear, nothing to behold of the company, 5 cents, and then over that 9-month chart, you see the move from 5 cents to 45 cents. It was a great move, and if you would have got shaken out and you were too fearful, you would have missed it. Despite having done the work, picked the right company, you wouldn't have got it if you got shaken out. And this is AbraSilver's share price chart, and this is the biggest one I've had so far in my investing career. And I think it's good perspective of what can happen of buying these companies at their lows and riding them up to the realistic, practical top valuations. Today, I think it's, AbraSilver is multiples better than they were back then, and that to me shows the opportunity that's ahead. Number 4, leverage exploration through the prospect generator model. Another thing that I've unfortunately learned the hard way in my investing career is that exploration is both tough, risky, and you can lose a lot of money quickly. And that has sort of driven me into the prospect generators. To me, I think giving up some upside to protect your downside is a great way to participate in discovery investing. And the companies on the right are companies that I've invested in that either employ the prospect generator model or a hybrid of the sorts. So the prospect generator model says, okay, if you have 5 projects in your portfolio, you JV 4 of them, and one of them you go after 100%. And to me, that's sort of that happy medium between full out exploration and the prospect generator model. I don't think it's a ubiquitous buy them all. Just like any junior company, there's going to be pluses and minuses to any of those companies. And you want to still be very picky in the companies you pick. Especially you want to be looking for great teams with great projects, but that are attracting the best of the best senior producers to be their JV partner. So not only is prospect generation, I think, a good way to de-risk your investments, I also think it's a sign of the times. Like if you look at the tier 1 jurisdictions such as Canada and the States, the easy to find outcropping deposits have mostly been found. So you're having to look undercover, drill deeper holes. If you look at Nevada, you go after these sulfides, 8,000 meter holes to find these sulfide sources. This stuff all costs a lot of money. And for a junior exploration company, this means a high rate of dilution and possible you're going to miss. So finding a JV partner that has the deep pockets to do it, if you can construct the right deal, to me makes a lot of sense. The other side to it is, again, the easy to access places in the tier 1 jurisdictions have really been accessed. To make that new next big discovery, a lot of people are having to go to the Yukon, Northwest Territories, Nunavut, Labrador. There's poor infrastructure, there's a short drill season, and just the costs overall are super high. So to me, it makes a lot of sense to be a prospect generator in these sorts of environments. Number 5, and here's 4 speculative ideas for you for 2024. So the first one, I think people want to be paying attention to who consolidates the Central Lapland Belt. You've got, and particularly I'm talking about Helmi and Ikari. Helmi is held between B2 Gold and Orion Resources in a JV. 70/30, and Ikari is held by Rupert Resources. To me, this represents about a 5 million ounce potential project if the two are consolidated by a major. To me, I think B2 Gold is the obvious choice to consolidate this and the one that I would put my money on in terms of who it will be. B2 made a very strategic and good investment into Snowline. If you look at Snowline, it's a great company. It's going to be a huge deposit. Looking at B2's market cap and what they might be capable of, this might be out of their bandwidth. And I say might. I could see them personally trading that off for a deal like this that is accessible, that's in a jurisdiction that they know they have a toehold in, and still is impactful to their bottom line at that, let's say, 5 million ounce mark. Next to that, Agnico Eagle, they already have the Kittilä mine in Finland. They already have a toehold in Rupert. I think it's obvious, again, 5 million ounces is a good jurisdiction that they're already familiar with. I put them as number 2. And then you've got Newmont and Barrick, and for all those reasons, I don't see why you don't include them in there. Good jurisdiction, it's got the impactful size. I think the way to play that idea is Orion. Number 2, how big is Renault, and when might Sumitomo put it into production? So for those of you who don't know, Kenorland is a prospect generator, a very good one. They just converted a 20% position in their Frotet project for a 4% NSR on Frotet. And while the share price did appreciate on the news, it has come back since. And really, I don't think reflects the value that's in the company. I think the market is probably, it's not only because it's bad, but I think they're still asking the questions, how big is Renault? And when is this going to go into production? And then you have a value of what that NSR is actually worth. If you look at their most recent results, it was headlined by around 20 grams per gold over 19 meters. And I think speaks to the quality of the system. And I think if you look at the pace of which they spent over the last 2 or 3 years, I think it says that Sumitomo is definitely interested in this project. And when you look at the current gold price, I would say, in the next couple of years that this probably is going to go into production. And I think gauging a 2.5 to 3 million ounce resource there at the current value or the current drill results is conservative. And the whole point to this is I think that NSR more than makes up for the $40 or $50 million market cap. And therefore you get their 20 million in cash and their portfolio projects, which will see 20 million in spending, absolutely free. And to me, this is a great way to de-risk discovery investing or exploration investing. Number 3, is it time to buy FPX nickel? Talking about first tier 1 jurisdictional risk, FPX was hit with a First Nations issue last August. There's 4 First Nations that are affected by the possible development of Dakar whenever it goes into construction, and one of those First Nations decided that it didn't work for them anymore, or that they've got issues with it. I think this is going to get resolved, and I don't have enough time to go into why, but I think it does get resolved. And I think also, if you look at Sumitomo, one of the largest players in the global nickel market, decided, despite this First Nations issue, to take a 10% position in the company at a premium to market valuation. And so I think that this gap is going to close despite the nickel price being not very good right now. And I think FPX's Dakar is going to be a mine in the future. Number 4, Argentina sees a flood of investment by the major miners. Javier Milei's election into government in Argentina, I think is, especially coming from a libertarian, I never thought I would see it. I think he's going to have a tremendously positive impact on the country, and I think you're going to see it open up. And by open up, I mean you're going to see inflows and outflows of cash the way it should be in a normal country. And I think when that happens, I think the floodgates are going to open to a country that has very high geological potential. The likes of Filo, Abra, Lazulis, Jose Maria. These are big deposits that are going to capture a lot of people's attention, and I think the money floods in. And we've already seen Teck option Abra Silver's La Copita project, a US $20 million spend over 5 years to acquire 80%. And I think that's just the tip of the iceberg. Abra Silver is led by CEO John Miniotis and VPX David O'Connor. Market cap's around 160 million. I don't know what it closed at yesterday, but at a 29-cent share price. Good strategic holders, and we've got a PFS that's upcoming, and it's going to include the newly included Jack zone, not only into the resource, but now into the PFS. And if you put this in terms, so this is a gold silver oxide deposit at surface. If you put this in gold equivalent terms, you're looking just over 3 million ounces at gold equivalent at almost 2 grams per ton. This is open pittable and leachable. I think these are about 2 of the best scenarios you can have in terms of upside in your economics. And I think you're going to see that in the upcoming PFS. Like I said, they've got a JV with Teck Resources on La Copita. They've already had some success there, 226 meters, so 0.3% copper, some gold and some moly. And like I said, porphyry exploration is probably very much a senior miner's game. And so bringing Teck in to do this and to still have upside on that 20%, I think is a great optionality play. And Teck has already commenced drilling on the project. I started Field Notes last fall. Field Notes follows me to the projects of the companies I'm invested in. If you go on YouTube and you search Field Notes, you'll see it come up. I've got three pieces of content on there. The first episode is all about me and how I got to standing in front of you today presenting. There's also an interview with Dave Lotan, who's a long-term sector investor, and there's a ton to be gleaned from Dave. Episode 2 follows me to FPX Nickel's Dakar District in central BC. Go on site with CEO Martin Turenne, and I think you'll understand why I think now is the time to buy FPX Nickel. Episode 3 is upcoming. Junior Stock Review is published weekly. The portfolio represents my personal portfolio. I rank all the companies, give buy at or below pricing, and I answer all my subscribers' questions. Thank you very much.